Barron's Roundtable, sponsored by Global X ETFs.
Welcome to Barron's Roundtable, where we get behind the headlines and prepare you for the week ahead. I'm Jack Otter. Coming up, investing in innovation, how ARK CEO Cathie Wood is helping investors take advantage of the AI craze. Then, investors think the sports business is a sure bet. The industry is undergoing massive change, minting new millionaires as billionaires bid up franchise values. How you can invest too. And later, a look at the complicated bidding war for media giant Paramount. But we begin with our expert panel and three things investors ought to be thinking about right now. On the Barron's Roundtable, my colleagues Ben Levison, Andrew Berry, and Elizabeth O'Brien. So, Ben, the market got really spooked this week by interest rates and inflation, but then even more serious concerns about geopolitics.
That's right. We got our inflation reading, and it was hot, and that wasn't good. We had two hot readings to start off the year, and the idea was those were seasonal. Just that's what happens when you come into a new year. But this third one from March really seemed to say, okay, the economy is running hotter than it should be. The Fed is not going to be able to cut rates the way the market had expected. But by Thursday, the market seemed to be okay with that. It was only on Friday that we actually had a very large loss, and that was really due to these geopolitical concerns. There was reports that Iran is about to attack Israel, and that really sent the market kind of into a free fall, with the Dow Jones Industrial Average falling 2.4%, which is its worst week since March of 2023.
When people get worried about geopolitics, especially in the Middle East, oil goes up, but commodities in general have been on fire. Even copper, which is usually sending a positive economic signal. Can you break that down for us?
Sure. I mean, part of this is that the economy, when it's running hotter, that means that there is demand for things. And with copper, there's also been a lot of talk that it's going to be needed for AI. So it's gone from being a kind of an EV play to an AI play, and that's helped it too. But you also then throw in these geopolitical concerns, and that's really lifting oil. That's been helping gold somewhat. And so you get the whole commodity complex has been rising. You're even seeing a lot of the commodity making, the stocks of the commodity makers going up, but that kind of ended at the end of this past week because when people get scared, they sell everything.
Explain one more dynamic for us, though. We were told that when inflation goes up, it reduces the future value of the cash flows of these big tech companies. So they were a bad bet, and cyclical stocks were the place to be in a higher interest rate environment. But big tech actually did well last week.
Yeah, and I think that's what is a misunderstanding of really how this works. The tech stocks that don't really have profits yet, they get hit hard by those higher rates. But for companies like Apple, they're super high quality. They're going to make money regardless of the environment, and they also have a lot of cash. They don't have debt, and with these higher rates, you're actually making something on the cash, so they end up doing well as well.
All right, another important thing for investors is what's known as earnings, Elizabeth. And the earnings week, unofficial earnings season, unofficially kicked off Friday with some bank earnings. Tell us about that.
Yeah, that's right. Bank earnings kicked off this past week with JP Morgan, Citigroup, and Wells Fargo reporting. Now, earlier in the week, CEO Jamie Dimon made headlines with this big, long letter to shareholders.
Very long.
Very long, yeah. Maybe he needed an editor, but yeah, he said that, among other things, that market participants were a little too optimistic on prospects for a soft landing. He also said the bank was preparing for interest rates at anywhere from 2% to 8% plus, which is a heck of a range. Now, when JP Morgan reported, it lowered its forecast on net interest income, which is a key profit driver for banks. And of course, that didn't make the market happy. Shares fell. And Wells Fargo, on the other hand, maintained its guidance for net interest income. Citigroup beat earnings estimates. The turnaround story continues. It's one of the best performing bank stocks in the year. And it's that CEO Jane Fraser has been reorganizing things, and it seems like that might be having an impact.
One quick thing, real estate was a concern on banks, commercial real estate not doing well. Should we worry about that, or is that just kind of a one-off in New York?
Yeah, well, the commercial real estate is more of a factor for the regional banks. So, investors will be certainly looking closely to them to see about the health of their real estate portfolios.
Andrew, I want to ask you about airlines. As a frequent flyer on Delta, every plane is packed. It's kind of annoying as a traveler, but it's probably good for the companies.
Yeah, it's good for the companies. Delta kicked off the airline earnings season this past week with a good report for the first quarter and offered some pretty strong guidance for the seasonally strong June quarter. Delta's probably the best of the bunch in the airline sector. You've got strong management, a decent balance sheet, a lucrative credit card relationship with American Express, and a segmentation strategy keyed off premium premium seats, which means getting people who can afford it to pay more for convenience and other factors. If you want to fly to Europe this summer on economy, cost you around $1,000 round trip. Business class might be $3,000, $4,000, $5,000.
Ouch.
So, but Delta's benefiting from a return of corporate travel customers, and that's been a positive for them. And the negatives have been higher fuel costs as well as labor.
Historically, airlines have been a lousy investment. I mean, they would have nice periods where they do okay, but over the long term, not so good. Do you like the stocks here?
Yeah, the stocks are actually quite cheap right now, among the lowest price stocks in the entire stock market. I mean, take Delta, for instance, it's trading for around 46 now, which is just around 7 times this year's estimated earnings. And Ravi Shankar, the analyst at Morgan Stanley this week, said that the stock could potentially double. He sees the potential for about $9 a share of earnings in a couple of years. United and American trade even cheaper for 4 to 5 times earnings. And something that could happen in the coming years is that these companies hit profits and pay down debt, you could see more return of capital to shareholders, and that would be a positive for them.
Still feels like a trade, not a long-term investment.
They actually might be a long-term investment, even though Berkshire Hathaway got involved a couple of years ago and then got out. So they may not be trading sardines as much anymore, but it's going to be hard to win over investors to that.
All righty. Thanks, Andrew. Technology isn't just powering the market higher. ARK Invest CEO Cathie Wood says it's changing the world faster than most people realize. She shares her insight on where the opportunities are and how she's helping individual investors get access to OpenAI. Next. ARK Invest is known for focusing on innovative companies that transform the future and suffering the volatility that comes with that approach. The firm is out with its annual list of big ideas, quote, disrupting the norm, defining the future, which includes key themes such as artificial intelligence, electric vehicles, and autonomous technology. Joining me now is ARK Invest CEO Cathie Wood. Cathie, thanks so much for coming on the show.
Thank you, Jack. Very happy to be here.
So I'd like to start where a lot of these tech conversations start, with AI. But your firm just announced that you're giving individual investors the opportunity to get a piece of OpenAI, which is still a private company, through the ARK Venture Fund. Clearly, OpenAI is doing fascinating things, but sketch out the future for us. How does that company actually make money?
Oh, well, right now, working with Microsoft, they're getting a revenue split of, the millions of people who are using it on a day-to-day basis. And I think they're partnered with the company, Microsoft, which has the best penetration of the enterprise sector in the world. So they definitely picked a good partner, because I don't know about you, but I'm using GPT all the time to help me write things faster and just become more productive generally.
Could we get to the process through which you're giving investors access? Through something called ARK Venture, and it's a different structure than the mutual fund or the ETF or even the closed-end fund that a lot of people are used to. Can you explain?
Sure. This is an interval fund, and it's owns both public and private companies. Our aim is 80% private, 20% public, and we can have daily inflows, but quarterly redemptions up to 5% of NAV. Now, you made a very important point at the outset. We had been looking for a way to democratize venture capital. How many of our clients say, I don't make enough money, or I don't have enough in the way of net worth to gain entry into venture capital funds? Those are accredited investors. Most people, the vast majority of people, are not accredited. And so we're saying, there's got to be a way. The interval fund was created actually in the 90s for this reason, for exposure to private equity.
I got to ask Cathie Wood about Tesla. You are closely associated with that company. You're one of the most bullish on it. Your argument is you should value it as far more than an automobile company. Can you explain?
Sure. We know that most of the analysts who follow it are auto analysts, but this is not an auto company. It's a robotics company, an energy storage company, and an artificial intelligence company. It's also a manufacturer of factories. So it's a very big idea. Autonomous taxi platforms combine those three technologies. Autonomous taxis are robots, they will be electric, and they'll be powered by AI. Those are three big ideas which are feeding each other and we think will cause explosive growth and SaaS-like margins, software as a service like margins. So instead of margins, gross margins in the teens, where they are now, we could see them scaling to the 60 to 80% range once Tesla launches its robotaxi platform. And we believe this is one of the biggest opportunities in the innovation world today.
We just saw the chart of Tesla, very volatile company, obviously, even though it does have huge potential.
Right now, we think AI is the biggest opportunity. Tesla's the biggest AI project in the world. Most of the names in our portfolio are there because they meet the four criteria in AI that we think will make a difference. They've got deep domain expertise. They are taking AI seriously with their own hiring, and they're being aggressive, going for the opportunity. They have global distribution, and most important, they have proprietary data that no one else has.
Alrighty, we could go on and on, Cathie Wood, but we do have to leave it there. Your insights are always fascinating. Thank you so much for coming on.
Thank you, Jack. Thank you very much.
The sports business is booming. We'll take a look at how investors can get their head in the game and score some big opportunities next. From gambling to paying college athletes to the explosion in women's sports, the sports business is undergoing a massive transformation. Leagues and teams are netting huge revenue from TV and streaming, sports betting, and apparel sales. And there's an opportunity here for investors to score big. Barron's editor-at-large, Andy Serwer, joins the panel. So, Andy, I know all eyes are on AI these days, but at least in human business, I think the most interesting trend is what's going on in sports. You are just back from the biggest conference in sports in Keogh Island. What happened, and how is the she crab soup?
There was a lot of crab meat in that soup, Jack, and I'm glad you're asking about that. It was amazing. A lot of big names there in the world of sports. It's such a sprawling business, trillion-dollar business. You got the teams, the leagues, broadcasting, apparel, merchandising. And yeah, it's growing fast. You mentioned some of those facets of the business. Gambling, for instance, you guys, 30 states now have that. Americans wagered $120 billion last year. Digitization that helps that gambling also does things like analytics, gaming, and as well as streaming. So that's driving the business as well. And that's helping to drive globalization. You know, a lot of businesses talking about how globalization is slowing down in this environment. Not true at all for sports. If you think about it, the big teams in Europe, like Manchester United soccer team, as well as teams like the New York Yankees, the Denver Nuggets, and, you know, all these big names increasingly have global footprints because social media is pushing out clips all around the world.
You didn't mention NIL, this name, image, and likeness thing where if you're on Instagram, you're a decent college athlete, you can make hundreds of thousands, in some cases millions of dollars. Tell us about what that's doing.
Yeah, I mean, that's unfolding right now. It's a little bit messy state by state, but you're right. I mean, if you're a women's college basketball player, you know, out there, or for instance, you know, a football player, there's a guy at the University of Houston. I think we have a picture of him, Damian Dunn, you know, working for a local Ford dealer, getting a few $1,000 in his pocket. But, you know, the big names out there, Bronny James, Arch Manning, and Caitlin Clark, the superstar women's basketball player at the University of Iowa, they have the value of about $3 or $4 million a year annually from advertising, which is, of course, a sea change for amateur athletes.
Sure.
So Caitlin Clark drove this enormous viewership for the women's college basketball championships. But now that she's going pro, is that going to sustain itself, or is it just going to go away?
Yeah, I mean, look, Caitlin Clark is a generational talent. No doubt she will be missed on the college scene. But there are other players who are really exciting to watch. For example, South Carolina's Tessa Johnson had a fantastic championship game. She's only a freshman. And UConn's Paige Beckers did not declare for the draft. She's staying at the school for another year. So I think the momentum is going to continue.
And, you know, Elizabeth, it's not just college basketball for women. I mean, the WNBA's been doing great. World Cup's been doing great. Coco Gauff is reviving tennis. And there's a professional hockey league. And then you have the professional women's soccer leagues. Teams, and those are doing great. I mean, the value of those teams used to be a few $1 million not long ago. Now, $100 million teams. There's a transaction. Ron Burkle, a billionaire, sold one for over $100 million. The LA team is going to be worth probably 180. That's for sale. And you've got all these bold-faced names, you guys, who own these teams. Alexis Ohanian. You've got Chelsea Clinton, Jenna Bush. You've got Sheryl Sandberg. I mean, every famous person. The Pritzkers are in there. Just all across the board are in these teams.
So the bold-faced name crowd all over it. Andrew, even the rest of us can get a little piece of the action in a few cases. Tell us about that.
Well, there are two major public sports plays right now. The first is Madison Square Garden Sports, and it owns the New York Knicks and New York Rangers, two of the best teams in the NBA and NHL. Stock trades around 180 right now. That values the company around $4.5 billion. The teams, though, could be worth around $9 billion, with the Knicks alone worth $6 billion. So why does it trade at such a discount? Call it the Dolan discount. Refers to the controlling family, the Dolan family, and Jim Dolan, the chair. They're viewed as being not willing to sell the teams or the company. So you have that. But we've argued at Barron's that the stock looks attractive at these levels because the company could sell an interest in one of the teams, and there could be some pressure on them to actually do something in the coming years. The other one is the Atlanta Braves, which owns the Braves, the baseball team, which is one of the best franchises in baseball. Fortunately for investors, it is controlled by John Malone, and he's 83 now, and it's viewed that he may want to look to sell the Braves in the next year. The stock's around 40, and he could get maybe $3 billion or more for the Braves, which would mean a price of $50 or more for the team.
All righty. Well, there are more billionaires than there are sports teams, so I suspect these values keep on going up. Thanks, Andy.
Thanks a lot, guys.
Ben and Elizabeth, meanwhile, have a pair of actionable ideas, and Andrew Barry will break down the complicated bidding for Paramount. Stay right there. Andrew, there is a messy and somewhat controversial situation happening over Paramount. Can you break it down for us?
Well, Paramount's been a tough media stock in a tough sector in the last 5 or 10 years. The stock is down around 11 right now, down from 50 a couple of years ago. And now the controlling shareholder, which is National Amusements, which is in turn controlled by the Redstone family, looks like it may want out of Paramount. And it's been reported that it's negotiating a deal with a company called Skydance, which is a private company, which is controlled by David Ellison, who's the son of Oracle founder Larry Ellison. And under this potential deal, National Amusements may be taken out, but that the public shareholders will remain. And to make it even worse, the public Paramount might actually buy this private media business from Ellison for a couple $2 billion or more and further dilute shareholders. And so it's a messy situation. Analyst Rich Greenfield has called it chaos and dysfunction at Paramount. The directors seem to be concerned about it. They're afraid of lawsuits. 4 of the 7 are not going to stand for re-election. So it's a messy situation right now there.
I think we need a diagram to sketch that out. But I will say Greenfield is often right, but also kind of negative on legacy companies.
And one thing that could be happen positive, if this deal falls apart, that's probably the best thing for Paramount shareholders right now.
Is there a bull case to be made for this legacy media company?
Yeah, the bull case is that the stock is very depressed, and you could have potentially taken up the entire company. Apollo, the private equity firm, has reportedly been interested in buying the whole thing, which could be a nice bump relative to where the stock is right now. So investors are probably hoping for that, or maybe just some turnaround in the business or some better trends.
By the way, Apollo is yet another part of that sports business we were talking. Josh Harris buying the Washington Commanders.
Yeah, I mean, it shows how profitable Apollo's been.
Exactly. Let's go to actionable ideas. Ben, you got one for us.
I'm looking at Bank of America. It's kind of the anti-JP Morgan, with JP Morgan dropping after earnings. I'm actually looking for Bank of America, which fell 2% because of JP Morgan's numbers, to actually maybe get an earnings bounce. The net interest income isn't going to be great, but the fee income should be good. And I think there's just so much negative sentiment that anything that looks slightly positive can give the stock a bump.
And Elizabeth, for procrastinators like me, you've got some advice.
Yes, as we all know, this upcoming Monday, April 15th, is tax day. It's the deadline to file your income tax returns now. If you're not ready to do that, you can file and request an extension online. That'll give you until October 15th. You just have to remember that is only an extension to file. It is not an extension to pay. So if you think you will owe the IRS money, you still have to pay it by Monday. You'll have to do your best to estimate, and pad your estimate a little bit to be on the conservative side, because you don't want to end up owing some penalties,
They'll give you that money back, but that's cheaper than paying the penalty.
Exactly. Yeah.
Alrighty, thanks, Liz. Thank Andrew. Thanks, Ben. To read more, check out this week's edition at barrons.com. You'll also get a longer interview with Cathie Wood. Don't forget to follow us on X. That's at Barrons Online. And that's all for us. We'll see you next week on Barron's Roundtable.